Hi friends, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss another problem on partnership account. This is lecture number 18 on the chapter partnership account and lecture number 1 on the topic death of a partner. A and B sharing profits and losses in the ratio of 3:2 took out joint life policy on January 1, 1994 for rupees 20,000. The annual premium payable on the policy was rupees 2,000. The surrender value is nil in the first year, but thereafter it increases by rupees 1,600 per annum. On December 31st, 1997, A dies. So the policy account and policy reserve account in the books of the firm from 1994 to 1997. This is a problem on death of partners in partnership account. So here you need to prepare two accounts, namely policy account and the policy reserve account. So under this method, the amount of premium paid is debited to life policy account and the sum equal to the annual premium is transferred from profit and loss account to a life policy reserve account. Life policy account is carried forward at its surrender value, the excess of cost over surrender value being transferred to life policy reserve account and not to profit and loss account. When the policy matures on the death of a partner, the amount received is credited to the life policy account. Any profit disclosed by this account is transferred to life policy reserve account. The life policy reserve account is then closed by transferring its balance to the partner's capital accounts in their profit sharing ratio. So let us start and prepare the two ledgers, namely joint life policy account and life policy reserve account. And whatever is written here regarding the maintenance of the account, we will follow this principle while drafting the ledgers. So first of all, I need to prepare the joint life policy account. So the first column is debt, then particulars, then rupees, again debt, particulars and rupees. And simultaneously, I am going to prepare the life policy reserve account. So the same structure you have to follow: debt, particulars, rupees, then debt, particulars and rupees. So on 1st January 1994, amount of premium has been paid for rupees 2,000. So your journal entry is joint life policy account debit to bank, and this is the amount of premium that you have to pay, and the amount is rupees 2,000. Under this method, the amount of premium paid is debited to a life policy account, so that we have done, and a sum equal to the annual premium is transferred from profit and loss account to a life policy reserve account. So in life policy reserve account, you have to transfer this amount from PL. So here I am going to write by profit and loss account. In life policy reserve account, you have to write by PL account rupees 2,000. Life policy account is carried forward at its surrender value and the excess of cost over surrender value being transferred to life policy reserve account. So here in life policy account, it will be carried forward at surrender value. Now it is given that on 31st December 94, that is the first year, the surrender value was nil. So whatever amount is lying in this account, you have to transfer it to life policy reserve account. So I am writing here policy reserve account, and the amount is rupees 2000. So you have to transfer this amount to life policy reserve account. You write here on 31st December 94 to joint life policy account rupees 2000. So this way you have completed drafting the two ledger for the first year. So again, I just repeat for your understanding. So in the first year, when the amount of premium was paid, so joint life policy account will be debited and bank will be credited. So joint life policy account debit to bank. And this amount you have to transfer from profit and loss account to policy reserve account. So in life policy reserve account, I have to write on the credit side by profit and loss account rupees 2000. Your journal entry is profit and loss account debit to life policy reserve account. It is given that the surrender value for the first year is nil. So the balance in joint life policy account will be transferred to policy reserve account as because the surrender value is nil. So I have transferred this balance by policy reserve account to joint life policy account, and in policy reserve account I have transferred to joint life policy as rupees 2000. Now in the second year on 1st January 95 premium has been paid. So to bank account rupees 2000, and at the end of the year the joint life policy account will be carried forward at surrender value. Now it is given that on 31st December 95 the surrender value is rupees 1600. So I have to write here as by balance CD rupees 1600, and the balancing figure here will be transferred to policy reserve account, that is life policy reserve account, that is rupees 400. Now on 31st December 95 I have to transfer this balance from profit and loss account rupees 2000, and on 31st December 95 you have to transfer this amount of 400 to policy reserve account. So I have to write here as joint life policy account rupees 400, and the balancing figure is the amount of surrender value. So you have to write as to balance CD rupees 1600. So this way I have completed drafting the ledger for second year. So on 1st January 96 the balancing figure will be brought down. So I have to write here as to balance BD 1600. Then on the same day you have to pay the amount of premium. So to bank account the amount of premium was rupees 2000. Now it is given that the surrender value for as on 31st December 96 will be increased by 1600. So this amount will be 3200, and the balancing figure will be transferred to policy reserve account. So I have to write here as policy reserve account. The balancing figure will be rupees 400. Now in policy reserve account on 1st January 96 the balancing figure will be brought down here as by balance BD 1600. On 31st December 96 the amount will be transferred from profit and loss account for rupees 2000, and on 31st December 96 the amount of surrender value will be carried forward as 3200, and the amount of 400 will be transferred from joint life policy account. So I have to write here as to joint life policy account rupees 400. So this way, I have completed drafting the ledger for third year. Now, on 1st January 97, the amount will be brought down here as to balance BD 3,200, and on the same day amount of premium was paid, so to bank account 2,000. Now on 31st December, since B died, you have to collect the amount from insurance company, and insurance company will pay rupees 20,000, the amount of the policy, and the difference is the profit that will be transferred to policy reserve account. So I have to write here as to policy reserve account, and the amount is 14,800. And let us see what is the situation of life policy reserve account. So on 1st January 97, I have to write here as buy balance BD 3,200. Then on 31st December 97, the amount will be transferred from joint life policy account. So I have to write here as joint life policy account rupees 14,800, and the total is 18,000. And this amount will be shared between A and B in the ratio of profit and loss. That is, the PL ratio is 3:2. So on 31st December 97, so two partners capital account. A will get 3/5, so 10,800, and B will get a share of 2/5, that is 7,200. Hope all of you have understood the solution, and if you find any difficulty in understanding, feel free to communicate with me through email and the WhatsApp number given in the description box. Thank you. Thanks for watching the lecture.